Hi, Kelly Eckholt here to update you with the key events of the week. So the data calendar in New Zealand was a bit sparser this week, but what we did get was in the labour market, which suggests that labour market conditions are continuing to improve just a little bit. In the December month filled jobs data, that was reported as flat, but the November data was significantly revised up to a 0.5% rise. So what that means that in the last couple of months we've seen somewhere between 0.2 and 0.3% monthly jobs growth on an underlying basis, which is a welcome change in trend. And thinking forward to next week's labour market reports, it means that we now anticipate that the unemployment rate will remain unchanged at 5.3% because jobs growth is there now and seems to be at about a level consistent with population growth. In foreign exchange markets, we've seen a reasonably significant increase in the New Zealand dollar US dollar exchange rate. It's gone over 60 cents, which is the first time it's been up there since July last year. The stronger New Zealand economic data is part of the reason why it's rising, but an important driver has been weakness in the US dollar, and that's come about because the US and Japanese authorities have sounded interested in seeing a weaker US dollar trend for the time being. In Australia, we saw the release of the fourth quarter CPI report, and that was stronger than expected. Trim mean inflation there came in at 3.4% on an annual basis, which is obviously quite some distance above the Reserve Bank of Australia's 2 to 3% target range. Trim mean inflation in Australia has been higher on a quarterly basis in Australia than New Zealand now for 9 of the last 10 quarters. And all of this has led our Australia team to now expect a rate rise from the Reserve Bank of Australia at their meeting next month. I'll be back to update you again next week.